Hey guys, Mike here. So, oh boy, what a day in the market. And I mean, a red day. And one thing that just kept pushing the market down today when everybody kept thinking there's going to be a reversal was the put flow. I mean, they were just coming in non-stop, right? I mean, big money was buying them. I saw one that was like 2.5 million, 410 on the SPY, I believe, expiring October 5th. Again, I don't mean the SPY has to go to 410, right? It just needs to keep going down for them to make money. And so, but that was one of the things, right? And of course, the economic data doesn't really look any better, so that didn't really help things or anything. But we'll go through a few things to make sure you understand like what's truly happening, things you want to see, what's going on behind the curtain, that kind of stuff. And one thing I did find interesting today was I saw a bunch of people that had shorts coming out, and they're like, "Hey, I'm either taking half off the table or just covering my shorts right now," because I think what they're expecting probably is more a short-term bounce because of where we're sitting at in the market right now and how many red days we're getting here and stuff. So one thing that's happening, and this is one reason, like you really never have to worry about time in the bottom if you're trying to get into a stock you love or the indexes or whatever you're trying to get into, because what's going to make it up is the short coverings, right, when it happens. And what you're seeing now is short positions are piling up in the NASDAQ, especially in the futures. And one thing you see is about a net short of 8.1 billion on the NASDAQ 100 with all long positions unwound. And this comes from Citibank. As far as S&P though, $15 billion in long positions are still outstanding in that one. And when you look here, you just see the amount of puts, right? So this is the NASDAQ 100 put option activity. This is the put versus the call open interest. And it's the highest we've seen since 2021. Okay, I mean, I guess that shouldn't be a surprise because we've been on this crazy run, and it's the NASDAQ 100 that's the best target because it's held us up, right, this whole time. All these other stocks, so many of the stocks are still actually negative for the year, believe it or not. And when you see right here, this is the percentage of stocks above a 200-day moving average on the NASDAQ as a whole, right? And when you get below that little dotted line, that's like correction territory. And you can see where we're at, right? It's actually around 27% today. But again, when you look at this, it's another way to look at the breadth and go, wow, or how are stocks doing? Well, the NASDAQ has a boatload of stocks, and when you only have like 27% above a 200-day, that's not a good thing. That's why we keep talking about, and ad nauseum here is talking about those Magnificent Seven or the top 10 stocks, and how big money, found another way to run the market up, just invest in those 10 stocks because they have such high weights. And look at that right there. And of course, you'll have to have a few more behind you, obviously, but basically the ones with the largest weight make the stock market look like it's doing all great and everything. And when you look at the other ones as a whole here, I mean, as I give this out every morning during the news brief, I do the NASDAQ 100 and S&P 500 and then Russell 2000 percentage above 200-day moving average. You see the NASDAQ 100 by itself is much higher, right? But you look at the S&P, 42%, so less than half. And then the Russell 2000 is a hot mess, as we know. Not even a third of Russell 2000 stocks are above their 200-day moving average. If you saw the video yesterday, you saw Jeremy Grantham talk about how, I mean, it's like 60% of them aren't even profitable companies, right? So they're really getting hammered in this kind of environment, Now, what are the stocks that are losing more than any of them? Well, of course, it's the unprofitable tech companies. And so you can see when you compare this is at the very bottom line there, that will be the unprofitable ones. And then you go with the NASDAQ 100 and then the tech dividend ETF. And of course, you can see which ones are way in the negative right now, which shouldn't be surprising. But another thing to look at and pay careful attention to this, believe it or not, is a great indicator to use. It's this one right here. And guys, if you get anything out of this, please hit that like button. It helps people find this video. And if you like the content, think about hitting that subscribe button down in the bottom. The Fear and Greed Index, which reached fear, it's only 3 points away from extreme fear. I've done a video on this for the members showing them. You can get a lot lower than this for sure, especially the other one I like to use. But it just lets you know, like, when do you buy? You buy an extreme fear. You don't buy an extreme greed. And so it depends on, what your investment or trading strategy is, just FYI. But when we start getting down here, this is when people start to kind of look for at least a relief rally, maybe not the bottom per se, because this thing go all the way into single digits. Just keep that in mind. Now, when you look at the SPY here, you can see we are extremely close to that trend line that marked the bottom in October. I mean, extremely close. I think it's probably a percentage away, if that. And so again, we got the gaps above us. When we pull out, we did the moving averages up. But now I told you this right here. Remember the weekend I said you don't want to break that level. Well, now we've broken that level. So what's the next level we can look at right here? And when I look at this one, you see right there around that 420 area right in there, that seems to be a good target, a good level of support. So I'm actually going to put a support line right there. And then guess what that lines up with? It lines right up there with the 200 moving average, right? And if I did have the volume profile in here, I can tell you that lines up with the support area. So that's something to look at right there to see if it does drop. But again, another thing too is we pull up the Fibonacci levels. That would also put us around the 50 fib retracement level right there from the last time we hit this trend line up to the high of this year. And so that's another thing to pay attention to. Now QQQ, again, we'll see if this continues to play out. So far we're heading down there. We'll see if we reach that trend line or not, or end up breaking it. We'll have to see. But again, a lot of people are looking for bounces. We have lost the 50. We have lost the hundreds to recap. You do have support right below that right there. But again, the 200 is pretty far down there. Actually, it's not too far. I mean, but I think it's between like 5 and 7%. And so also lined up with a gap almost right there. So let's keep that in mind when we're looking at this, because this is the one people are really looking at, right? So yeah, about 6% right there will be your drop to the 200 moving average. And so again, would that be healthy? Absolutely be healthy. It'd be a great place to actually get a bounce if you're looking to go into a fourth quarter rally or not. And then we pull up the RSI. I mean, you're seeing a little bit of divergence on the hourly right here with the RSI, where you get new lows on the QQQ, but that one's trying to say, okay, maybe the selling's slowing down for some kind of relief bounce. Again, what to see on that. It's not surprising people are starting to cover some of the shorts and everything. I mean, if you look at that pattern, you probably would too. Now, IWM, still a hot mess. You see the head and shoulders, it's still playing out. Another big red day for it. Again, it's in all of this different level of support, but it's heading right towards that trend line, which we had talked about. We'll see if we actually get down there. Again, oversold on the daily here. The MACD just looks absolutely horrible. It wants to at least try to turn up, but you got to get some buyers, right? Like I talked about, until the MACD is above the zero, you shouldn't see like a huge move up or anything. You're basically just looking for that histogram on the top to start actually showing some kind of love to you if we never get there. Now, when you look at Apple, this is the one, right? We've been waiting, and it had a horrible day today. And, dip buyers are trying to come in right here, but you can see, right, it was really breaking down. If we break down even more tomorrow and finally get past what looks to be the October low right there, then it's a great chance that we're going to fill that gap right down there below, which is also where the 200 moving average is going to be setting along with the year-to-date anchored VWAP. So keep that in mind. There's a lot of confluence right there. And Tesla, really kind of a boring day for Tesla. It actually held up much better than a lot of the other stocks. It was red, it was green, it was all over the place. Again, this is just one of those ones, it didn't reach that trend line last time. Maybe it will this time before you get the bounce. The 100 moving average is still holding up as support right here. But when you just zoom out and you go, okay, still in the symmetrical triangle, again, it can continue to wedge and wedge and wedge for weeks if it wants to, before you end up getting an actual indicator of which way it's going to go. And again, whichever way it's going to go is going to be a big move for sure. Now, Amazon, horrible day. It was almost down 5% at one point in time. You can see this is one of the ones we talked about yesterday. It's holding 100. Now it's lost 100. MACD looks like it might be trying to get a little momentum up, but again, once it lost that 100, boy, it was gone, right? And so this is another one. I know a lot of people are shorting that one, and there's a good reason why, because, well, it's Amazon. And just go back and look at the stock chart. Now, NVIDIA, again, this one's still holding 100. This one, and we'll look at AMD too, held up, right? And so semiconductors, a lot of them are red. Compared to the other ones, these held up. Again, this was green at one point in time as well. You can see AMD held the 200, which is where it knows it has a hold. So if it loses the 200, we're going absolutely down to that 89.90 area most likely if we start to see some more weakness. But it really is in that perfect position for some kind of bounce, right? I mean, you just look at these, you look at a lot of the other stocks, and so we'll see if we get that or not. Now, Palantir, as we talked about, pick your poison. You're either going with this head and shoulders to play out right here, or you're going to end up going with the bearish pennant, which kind of is playing out right here, as you can see. But it held. I mean, dip buyers came in around 1370, I think it was. And so it's trying to hold that level, because that's the level. You break that one, that's when you can definitely see it move down, just because it moved up so fast from like the $10 to $13 area, and it moved down so fast. The same, see what I'm talking about here with this gap right here? And that's why the Palantir faithful want to be stepping in and making sure they're buying right here. But there is a little positive divergence sitting with the RSI and MACD on the shorter term time frame right here. So maybe, you know, people are stepping in, maybe the momentum will change. And when it comes to earnings, we'll have Micron. That's really the only big name one I would be looking for. Obviously, semiconductor is probably the one that's lagged the group the most. So we'll see how they got to say the last quarter went, and more importantly, the forward guidance for them. Now, when it comes to economic data, again, you're getting a lot of mortgage data with applications and things like that nature, durable goods orders. And I think durable goods is going to be the most important because, I mean, we know we're in a slowdown and stuff, but the real question I want to see is if that comes in negative, you know, when does bad news for the economy become bad news for the stock market, right? That's what everybody's kind of waiting to see. You know, when you look at it. And the other thing is, I mean, I'll obviously pay attention to this for you, but I really want to see what's going to happen tomorrow in the next couple of days. Just, we're coming into, you know, end of month and everything. We're sitting here almost in extreme fear, right? We're sitting here with all these stocks moving down, breaking moving averages, breaking key levels, things like that. But the S&P still hasn't broke that one yet. And so, again, we'll see how that's going to play out and how far they want to push us down and everything. But, you know, the big thing to watch too is Apple, right? Because if Apple, you know, breaks down and starts heading into that gap, you could definitely see a lot of selling pressure put on then, right? Because, I mean, Apple is the market's almost barometer, right? Because that's the most bought stock out there, probably around the world, honestly. And so that's a big one to pay attention to. And I'll present something to you tomorrow because a lot of people are hanging their hat on this. Like, if this happens, right? And I want to wait till tomorrow to see how the market's going to react. But if this happens, the fourth quarter does this and all this stuff, and if that don't happen, what do people do then, right? And then, you know, another hot topic is going to be, you know, like TLT and bonds and stuff. And I'm doing a video for the members now, right, talking about this because everybody's talking about the Discord, and I was going to do something else, and I said, well, let me just do this, right? And trying to really, you know, you can't time a bottom, but you can look and say, well, this is some of the things you want to use to see, right? Instead of just maybe guessing on it and just buying blindly or something, you say, well, okay, maybe this would help. I don't know because I'm not a bond expert, but I can look at a chart at least and say, you know, just suggestions here. But, you know, it's interesting times to say the least. But again, seasonality is playing out, right? That's what's happening right now. We'll see if it's more than that. That's what we're going to have to see. Because if you look at the VIX seasonality, what's the VIX doing? It's up big time, right, over this last month. So, you know, so fun times. Anyway, hope you guys got something out of it. Hit that like and subscribe button if you did. I really appreciate you guys watching and sharing the videos. And I will see you tomorrow.